Welcome to DeFi Crypto, today's Crypto Daily News. All right. Well, as always, don't forget to follow us on Twitter. It's at DeFi Crypto T. I post a lot of stuff there, and I retweet a lot of things I find interesting. And you also get to know what the new videos are on this. You can also DM me if you want to send me a message. That's always welcome. And I also invite you to join our DeFi Crypto Today Discord channel, Discord server. And as you can see, there's lots of people participating. Right now, we more than doubled our membership in the last few weeks, which is great. We still want more because I would like this server to be a lot more active. So anyway, I might as well post that we're having a live video right now. All right. We're having live crypto news right now on YouTube. Come and join us. All right. Hopefully we'll have a few people to talk to today. All right. So, what's going on? Well, I know since January, I've been telling people bull market's over. And of course, nobody believes me. But it's like, how many more signals do you need to understand that the party's over? Okay? We're going to look at the charts, and we're going to look at a lot of stuff today to explain what's going on. And I'm talking about this not because I want to depress people, because there are still very exciting opportunities in bear markets. Okay, if you are very wise with your investments during bear markets, that's when you make a ton of money. Right now, Warren Buffett. Hi, everybody. We're going to answer your questions a little bit later. So, Warren Buffett, for instance, last year was not investing in anything. He was just piling up cash because he figured the market was overpriced. And I think he was right. And this year, he's very, very, very excited because finally the market is tanking, and he's shopping for bargains right now. So a bear market can be very exciting. I know it sounds counterintuitive, but the super rich make their money investing in bear markets. Okay, you got to learn how to do that yourself. So we're going to talk a little bit about that. So, and I'm going to talk about what I'm doing and what I think most people should be doing right now. All right. So to give you an idea, what's a bear market? Well, there's several definitions. Everybody's got their own definition. And I'm not too strict about my definition. My definition is like, there are no good news. And the stock market and the crypto market are reflecting this. Okay. So Noom says, this is my first bear market. How low can we get? I'm going to talk about that today. So if you bear with me a few minutes, I'll explain how low I think Bitcoin is going to go. You're going to be surprised. It's going to go really low, I think. That's my opinion. I could be wrong, but I think Bitcoin has a big way down the road. Okay, so you're going to see. All right, so the Securities and Exchange Commission defines a bear market as a period of at least 2 months when a broad market measured by an index such as the S&P 500 falls by 20% or more. And the opposite is if it goes up by 20% or more over 2 months, it's a bull market. The S&P has been down 24%. since the time of since January and the time they wrote this. Yeah, it's a recent article. So yeah, we're in the bear market. Okay, I knew we're in the bear market a long time ago. It just I don't have to wait to lose 24% of my money before I know. All right. Yeah, we're gonna have a look at Solana later. Well, I'm gonna explain a couple of things, and then we're gonna get to your questions. Okay. All right. So, but the thing you have to understand is there are always bull markets and there's always bear markets. Here they show that since 1928, there have been 26 bear markets. Okay, so it's like the seasons. Okay, you got summer and you got winter. And some people were talking about crypto winter. Well, you know, we're getting into crypto winter. So dress warmly. All right. So let's have a look at some of the news. Bitcoin, Ethereum, and a bunch of other altcoins lost a ton. Okay, so over 30%. And why? Because there's a lot of fear about recession. Okay, we're in a recession already. Okay, if you're asking me, we are in a recession. The Federal Reserve, there are lots of bad things happening, okay? Are they listing them here? I think it's another article. But in essence, the Federal Reserve during the last few years, during the time, what's his name, COVID was there, they wanted to avoid a recession. So they said, okay, we're going to throw buckets of cash at everybody. Now, what happens when there's too much liquidity, is that people take that money and invest that in the financial market, like the stock market and the crypto market. And it inflates the prices, okay? And the prices reach all-time highs every 2 days and so on, okay? And everybody's saying, oh my God, it's so easy to make money on the stock market and the crypto market. Yeah, it's easy when everything's going up. But that's because there was too much cash on the market, and that was caused by the Federal Reserve. Okay, if we didn't have a Federal Reserve, and it's it sounds like the Federal Reserve has always been there, but no, it's a new thing. It's 103 years old only. Okay, it's not a very old institution, and it's the one that created, basically, every time the Federal Reserve acts, it amplifies what the normal market is doing. So if the market is bullish, typically any action that the Federal Reserve is going to make is going to push it even higher. If the market's bearish, it's going to push it even lower. We don't need the darn Federal Reserve, okay? We don't. The financial markets are basically, they balance themselves, okay? They take care of themselves. The market by itself, okay, doesn't need the Federal Reserve, okay? It's just that they have a ton of power and they want to centralize things, and it's a way for the super rich and the governments to control us, okay? But we don't need the darn things. All right. Anyway, so the Federal Reserve right now is doing two things that are creating the recession. They want a recession right now. Because they printed too much money during COVID, it created a lot of inflation. Everybody was telling them, you're printing too much money, we're going to have too much inflation. They said, no, there's no inflation. And then after that, they say, inflation's not so bad, it's temporary. And then they woke up this year and they said, oh my God, we got a lot of inflation. How'd that happen? So now, they only have two ways to fight inflation. They have to raise interest rates, and they are doing what they call quantitative tightening, which means they're taking money out of the market. Okay, and banks have no money to lend, regular banks, not central banks, because now the central banks are not giving them any. So what's that going to happen? Well, it's going to be harder to get yourself a house. And if you are lucky enough to get cash from a bank to lend you for your house, you're going to see that your mortgage payments are going to be a lot more expensive, and you're not going to be able to afford a huge house like you wanted to. Okay, so maybe you used to be able to afford a $500,000 house. Now you can only afford $380,000 because the interest rates rose a couple percent. All right, so that's a recession. Okay, because there's less money available. People and companies have no money to invest and open up new factories, hire new workers, and so on. And we're going to see that today. A lot of companies, especially in the crypto world, are firing people. So we are in a recession. That's what that means. So again, the news are all very nice like this. We lost billions of dollars, blah, 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 blah. And now here, this is interesting. For the first time in a long while, Bitcoin went under $20,000 and Ethereum was under 1,000. Okay, and my expectations are they're going to go a lot lower. So I don't think, personally, I'm not buying right now. It's going to go a lot lower. Why do I think it's going to go a lot lower? Well, have you looked at the latest figures from the latest inflation figures? It's almost 9% in the United States. In the UK, the Bank of England says they're expecting 11% inflation. We haven't seen these numbers since the late 70s, early 80s. And you know what they did, what the Federal Reserve did in the early 80s? They rose interest rates to 20% to kill inflation. 20%. Okay? So that's the lowest rate you can get. Okay? The banks, in order to lend money, they have to borrow from the Federal Reserve at 20%. Okay? And they have to charge you more than 20% on your house, on your personal loan, and whatever. Okay? But they couldn't, charge you 40%. There's no way to do that. So the banks' profit margins were shrinking. Banks hated this. Okay? They couldn't make any money lending money out. The interest rates were too high. To be fair, that was very hard medicine, but it did help control inflation. But for a while, people that were saving money at the bank and people that bought US Treasury bills, well, they were pocketing 20% risk-free. That's pretty amazing. Okay, so there's good and there's bad in all this. Okay, if you're a saver, if you've got a lot of cash, and the Federal Reserve jacks up interest rates, you're going to be able to make a lot more risk-free money because it's backed by the U.S. government. Okay, they will pay you back. All right, so I think Bitcoin is going to go down a lot lower than this. I'm going to, the figure I have in my head, and I don't know if it's going to happen or not, but my expectation is $5,000 Bitcoin. I know. It's super low. Why that low? Inflation's not going down yet. The Federal Reserve anticipates to raise interest rates by at least 0.5%, if not 0.75%, every 2 months, give or take, for the rest of the year and well into next year to try to fight inflation. Okay, so by the end of the year and into 2023, interest rates are going to be very, very high for mortgages and personal loans and company loans and all that. That's going to slow down the economy to a crawl. And not only that, we also have a lot of bad news. Okay, the war in Ukraine is killing the food industry. A lot of food products are. There's going to be a lot of food shortages because Ukraine and Russia are major food producers, and they used to sell a lot to Europe. But now, because of sanctions, because of the war, and so on, that's not happening. So Europe will have to find food somewhere else. And don't forget that North Africa does not produce enough food and is very much dependent on Ukraine and Russia. Now, if those guys cannot sell them food, they're going to be starving to death, literally starving to death. There's going to be famine there. Millions of people, we're talking hundreds of millions of people, are going to have trouble finding food to eat, okay, if they can eat at all. So that's major disaster. So food prices are going to skyrocket. Also, interestingly, if you check the news, I didn't put it up here, but there are several food processing plants in the United States that have been shut down lately. And I'm not sure if that's done on purpose to jack up prices, but I think that's the point. I think food producers are trying to take advantage of a bad situation and pocket some huge profits and, overcharge you for food. So that's what I'm expecting right now. Luke says it's just a bear trap bounce. Yeah, I'm not jumping in, Luke. It's going to be a lot lower than this over the next few months, trust me. All right, what's next? Flat tire. So again, it's the same story, but I wanted to show you something here. This is Ethereum price chart for the last since January 2020. And I want you to look at this part of the last part of the market, okay? Now, and I want you to look at this. You see any resemblance? This is what they call the psychology of a market cycle, okay? I talked about this in a previous video, but I'm going to talk about it again because I'd like you to try not to lose money, okay? Because we're around here right now. We're still around here. Because a lot of people say, no, we're not in the recession, we're not in the bear market, they're still very bullish in spite of the fact that, crypto is down like, 95%, and the stock market is down, like 60% at least, 60, 70%. We're going to go a lot lower than we are. We are around here. I expect we're going to go down here. And, well, this is the lowest of the low here. But, so in the next few weeks, unless something magical happens, okay, and inflation disappears overnight and whatnot, which I don't see happening, we're going to go from denial. My investments are with great companies. They will come back. And to total panic. Shit, everyone's selling. I need to sell now. Okay, so a lot of people are going to go there. we're starting to hear a little bit more about capitulation right now. So people just say, I give up. Bear market's over, it's bear market. Okay? So a lot of people are going to get out of the market altogether. And because they can't afford to lose any more money. So this is what I'm expecting happening soon, okay, in the next month or two. Most people are going to say, all right, I'm out of the market. And I think most people should do that. You don't have to sell everything you've got, okay? You can clean your portfolio if there's anything fishy and shitty in it, just sell it, okay? Because it's probably going to go down a lot more. But if you got good assets like Bitcoin, Ethereum, whatever, you don't need to sell them at a loss or anything like that. But what I would do is try to stay liquid, because that's the problem right now. The Federal Reserve is doing everything it can to eliminate liquidity. But if you are smart and you have liquidity, around here is a good time to look for bargains. So we're still a bit too high here. And I think we're going to go down and down and down in the next few months. This is probably by, I don't know, November, December maybe. If things go well, okay? If not, then this is like sometime next year. Okay, it depends how fast things evolve, and I don't know how fast they're going to evolve. Okay, we could be down in this depression state for a long time. Hopefully not. But anyway, be prudent. Okay, don't buy too quickly. Right now, I would try to stick to cash and cash equivalents like. Stable coins like USDC and a few others, okay? And just in case we reach the bottom, and my expectation is that Bitcoin is going to go under $10,000 and very likely close to $5,000. And I'm thinking similarly, Ethereum might be just $200-300 at the rock bottom. Okay, so if you've got some cash, okay, just wait, chill, watch Netflix until we reach the bottom. Once we're at the bottom, then make strategic investments. Okay. And then just wait for the market to recover. You see, like this part here is coming back here. Okay, so eventually markets go back up. So it's like waves like this. Okay, so it's always like this. You have a period of contraction, which is what we're experiencing right now with quantitative tightening and raising interest rates and taking liquidity out of the market and so on. So the market's contracting right now. And eventually people are going to start seeing some good news, and the market's going to expand again, and the cryptos are going to go up again, and the stock market, and everybody's going to be happy for a while until we get another contraction period. All right? So right now, what I'm doing, I'm trying to stay liquid. I'm not buying anything unless I think it's a good bargain. And I'm waiting for this period to appear. We're not quite there yet. We're around here, in my opinion. All right. What do you recommend we stick our stable coins? I'll talk about that in a few minutes, okay? I'm going to answer your questions in a few minutes. Let me just finish my presentation. I wanted to talk a little bit about Do Kwon and Terra. Right now, they are being slapped with a class action suit from the U.S. District Court in Northern California. There's several pieces. They're accused of doing a lot of bad things. First is that the tokens, they say, were unregistered securities, which is possible. The law is not clear on this stuff, so anything could be an unregistered security. And also, they say they made false claims about UST and Luna, and they made people buy at inflated prices. That could be any token. Now, what I think, what they're not talking about is that there are some aspects of the transactions around the time of the crash that look weird. And a lot of people that are investigating these transactions say, okay, did Do Kwon put a few $billion out of the fund and put that in his pocket through multiple wallet addresses? It looks suspicious. I don't know what the truth is. Some people think it looks very, very fishy. So maybe Do Kwon stole some money, maybe not. I don't know yet. But the Korean government, the South Korean government, says that Do Kwon cannot leave the country, and other Terraform officials either. Now it says here that Do Kwon is trying to apply for Singaporean citizenship. But see, when you do something like this, that doesn't look good, does it? It looks like you're trying to get to escape from the back door. Okay, why can't you just go to court and show the evidence and say, okay, I'm clean. Look, I didn't do anything bad, right? It doesn't look good right now. Okay, I think our friend Do Kwon here has something to hide, and maybe it's going to be revealed at some point, but we'll see. Okay, right now I don't trust the feller. Okay, I think the new Terra thing is useless. Okay, and I really don't like the way he handled the crash. Could have done a lot better. He should have followed the advice from CZ at Binance. They contacted him. He never answered, and he let $40 billion vanish in the blink of an eye. That was stupid. All right, talking about stablecoins to avoid, USDD. USDD is the stablecoin from Tron. And interestingly enough, it was launched just a few days before the UST and Luna crash. And it's using a formula that's very, 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 very similar to the Terra Luna UST system. And right now, it's off peg. I would avoid this thing like the plague for several reasons. Even if you wanted to short this or short the Tron token, don't do that. Because, well, first of all, Tron is backed by a billionaire, right? So he probably doesn't want his little baby Tron ecosystem to disappear overnight. So he keeps on putting more cash in there and trying to fix things and so on. So we don't know where it's going. Personally, I think it's going to go down to zero. But I'm not risking any money on this thing. I'm not buying any TRX tokens. I'm not buying any USDD tokens. I avoid these at all costs. All right, next. Here, another one, I'm avoiding the token from Celsius because there's a proposal for a recovery plan. I avoid centralized so-called DeFi projects. DeFi is decentralized by definition. These guys are mimicking DeFi and using DeFi to create very high rates of interest, okay, that they cannot get anywhere else. So they were using DeFi to collect billions and billions of dollars. And the problem with this system is that Celsius is like a black box. You don't know what's going on inside. It's not open source. It's not decentralized. You cannot see what's going on. Everything's proprietary, but they're using DeFi to jack up interest rates and give you very high yield. And now they're in trouble. Why? Because the collateral went down in value and they're losing a lot of money. So they're trying to get themselves bailed out and so on. And it's not the only one. As you know, there's several places that are having these problems right now. And of course, central banks now want to monopolize trust in money with their CBDC push. That's their own centralized crypto money, and say that crypto is shit. You say, look, Bitcoin just lost 60% of its value since all-time high, and look at Ethereum, it's crashing, and look at this and look at that. And they say, oh, it's too unstable, it's not good for you. Trust the central bank crypto instead. That's because those guys have a monopoly on issuing money, and they don't want to lose their monopoly. So don't believe a single word they're saying. Why? I want to show you this guy. I love the hat. Otto von Bismarck was Chancellor of Germany almost 200 years ago. And he was a very wise politician. Read this. Never believe in anything until it has been officially denied. So if you've got governments and central banks telling you, oh yeah, it's good for you, you know it's not. Basically, believe the opposite of whatever they're telling you. Okay? Do you remember George W. Bush and Iran, and it said, Iraq, sorry, and it said, Saddam Hussein has weapons of mass destruction. We've got solid evidence of that. And, you know, Secretary of Defense said that, everybody said that, the whole 9 yards, you know, and of course, they went to war. It cost trillions of dollars. Tens of thousands of American soldiers lost their lives there. Hundreds of thousands of Iraqis died, and countless other soldiers from other countries that joined the war effort died as well. And recently, in the last few years, they said, oh yeah, you remember those weapons of mass destruction? There weren't any. Oh, great. So we spent all that money and those lives, okay, for what? Okay, so remember this, okay? Always remember this. If you can remember only one thing from today, remember this, okay? This is probably the wisest thing you'll ever hear, okay? My history professor told me this as well, okay? Also, my history professor said, nothing in politics happens by chance. Everything is planned years ahead. So if you think that the war in Ukraine is just a fluke, no. America has been planning it. Yeah, believe it or not. And Russia as well, okay? It's been planned, it's been planned, it's been planned, it's been planned. And everybody is being taken for a fool right now, okay? The truth will come out at some point, but what they're telling you about it is total bullshit. For instance, and they're going to tell you that Russia is losing. Sure. This is the price of the ruble in USD over the last 5 years. Right now, the ruble is at its highest for the last 5 years. Right here, it was pretty low, and that's right after the war started, and right after government started trying to punish Russia, okay, with sanctions and whatnot. And you think the sanctions are working? I don't think they're working at all. The ruble is going sky high right now. This doesn't happen if Russia is losing the war. Okay, so if they tell you that Russia is losing the war, well, ask them to explain this to you. Okay. All right, we are ready for your questions. So let's have a look at your questions. And if you got more questions, go for it. Don't forget to ask me your questions. It's AMA, anything goes. All right, so earlier, Noob said, this is my first bear market. How low can we get? Is it early to start buying now? I think it's too early still, as we saw on the chart. I think we're here, and we need to wait until we're down here. Personally, my opinion, and I can't be totally wrong, I expect Bitcoin to go down around 5,000, okay? And some people even expect it to go lower than this, okay? Why? Because liquidity is being sucked out. The Federal Reserve is sucking out all the water, okay? It's sucking out all the liquidity. There's no more cash on the market, and it's going to get drier and 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 drier. They want to shut down the economy almost completely so that inflation crashes. Okay, basically they want you to be to stop buying anything. Okay. So because if you say, oh, I'm going to keep on spending like I'm doing normally, well, you're going to first thing you're going to notice is going to be a lot more expensive to buy anything, because there's going to be shortages of everything. The first thing you're going to notice is food shortages. The food prices are going to go through the roof. You already noticed the price of petroleum went through the roof. Same thing is going to happen with food, okay? Food prices are going to go through the roof, and then everything else, okay, will follow. All right, until they can stop inflation, which can take a long time. I don't know how long. It could be 6 months, it could be a year, it could be 2 years. Hopefully not that long, but it's possible. Okay. All right. Next, can you comment what happened with Solana? Well, let's have a look. I'm not sure what happened with Solana. I didn't follow. To be honest, I'm not very happy with Solana in general. Yeah, I think what they're trying to do is they're trying to do something really nasty. So apparently there's a whale, and they're trying to take over its account because it controls too much money on their platform. That's not DeFi, people. Okay. That's worse than centralized banking. That's like the government saying, okay, your money in the bank account, it's not yours anymore, it's mine. That's what they're doing. Okay, they're trying to avoid liquidation, but the way they're doing it is they want to bypass the rights of that wallet owner. Okay, so I hope they explained that correctly here. So, and the anonymous wallet has deposited 95% of Solana's pool of SOL tokens and represented 88% of USDC borrowings, but came close to a margin call last week as the SOL price dropped more than 40% to as low as 27. And the protocol would have automatically liquidated up to 20% of the whale's collateral if SOL hit $22, and would have potentially led to damage to the broader Solana ecosystem. A governance vote was floated by protocol developers to take control of the account. See, they want to take control of a private person's account. It's not their own account. I'm totally against that. If you wanted to avoid this, put limits on how much money people can put on your platform. Why are you letting a single individual, okay, put 95% of the pool? Okay, if you want to avoid that, say, okay, people cannot have more than 10% of the pool or 20% of the pool or something, okay, per wallet address or something, all right? Like right now, it's a little bit like you go to a bank, you deposit a small bank, let's say, and you deposit $100 million in there, and the bank made some bad investments, okay, and it says, well, I cannot let you have your $100 million back because I need it to pay off my own debt, the bank's debt. It's essentially something like that they're trying to do, okay? Because right now they're afraid that the whale's investments will get liquidated and make the entire ecosystem collapse. Well, why did you let the whale do that in the first place? That's stupid. It's like, one thing I keep noticing is that DeFi is very, 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 very young. And the people that are doing building the protocols essentially are kids with no freaking experience doing anything, okay? That protocol is not battle tested. That's what that means, okay? It never had a crash, it never had a recession, it never had a big whale that controlled 95% of its assets and that risked liquidation. And now it's like, oh, look, something bad happened. Okay, well, it's like leaving a gas stove open in your house and then you go out. And on top of that, you leave all the windows open, you open all the doors, thieves can go in and out, people can burn down your house. That's how they operate, those guys, okay? So that's my take on Solana. They're idiots. If you want to know the truth, they're idiots, okay? They don't know how to make a protocol safe. I wouldn't put my money there if you paid me to put my money there, okay? All right, so... And then Suju says it's a super cycle. Yeah, well, super cycles need to come to an end at some point. Bear trap trounce. Let's wait for a few lows before jumping in. Yes, we need to wait until it gets lower. As long as inflation is super high, it's super risky, and the markets will crash and crash and crash and crash and crash and crash. That's my expectations. Where do you recommend we stake our stablecoins? It's difficult to find good places right now, to be honest. I haven't looked at it in a while, but let's look at Yearn. I want to have a look at Yearn. I don't know if I need to open up my wallet. Bolts. See, right now, in terms of, well, the curve tri crypto, it's essentially stable coins, right? And you also have the curve MIMP tree pool. But the curve tri crypto gives you, at the moment, a pretty decent yield, okay? Right now, I would try to keep, like, why I'm talking about Yearn. Yearn has a very, very, very good reputation, okay? I keep talking about this, but we're going to talk about it again. DeFiSafety.com. If you want to know how safe something is, according to very strict criteria, check DeFi safety, okay? If you look at, where's the list? They changed a lot of stuff. I haven't been there in a few weeks, and now everything is new. All right. See, you got high scoring reviews. You can see all kinds of places where you can put your money. And we're going to sort them by highest. Okay. So the highest score technically means it should be safer. Again, that doesn't mean put 100% of your money there. Right now, for instance, Bankcard is at the top of the list here, but they had some issues recently. Okay, so again, watch out. Okay, check the news, make sure that everything is working perfectly before you put your money anywhere. So you see, you got Avi here. Avi is a good place as well. If we have a look at Avi, they've got several markets available now. It's gonna want me to connect the wallet. I'm not sure if I want to connect right now, but anyway. Yeah, see on Ethereum right now, you can earn any of these, but be careful, okay? Make sure that you don't put all your money on the same protocol and also on the same asset. So diversify your assets, diversify your protocols, and also it's not a bad idea to diversify your blockchains. Okay, as we saw, if you put all your money on Terra, well, it's gone. And right now, if you put all your money on Solana, and if Solana collapses, well, your money is going to be gone on Solana as well. And as we saw also with USDD on the Tron network, if USDD totally collapses, well, it's going to make the Tron network collapse, and your money is gone from there as well. So there's a lot of risks, okay? Make sure you are aware of the risks first, okay? And try to stick to projects that are have very good safety ratings, okay? So check DeFi safety, okay? Avi is right here. That's pretty good. Uniswap, okay? Check these projects, okay? Pull Together is pretty good, but right now it's being sued. There's all kinds of stuff happening, okay? This is a very rough year, okay? So put a little bit of money here, a little bit of money there, and so on. All right. Do I have an opinion on Drip? Drip is a black box. Drip is a black box, people. Let me find you Drip. You'll see what I mean. In DeFi, you want open code. You want audits. You want people that are KYC'd. Okay? So if you talk about Drip here, Drip network. Here we go. If we look at the chart, it's not doing amazingly well right now. Okay. And some of you might say, well, it's just the bear market, right? Could be. But there are intrinsic problems with drip. Drip does not generate anything. It only gives you income through taxation. Okay, so it takes your when you deposit, it charges you a tax. Okay, and it has several taxes. Okay, I'm not going to explain the whole thing. There are several taxes depending on what you do. If you compound your interest, you get tax on that. If you withdraw your tax on that, and deposit your tax, you're taxed several ways. All right, and the taxes are there to try to discourage people from taking money out, and to try to give you a very high yield. The yield is very, very high, and I don't think it's sustainable. And I think, this is my opinion, that part of the problem why it's crashing like this is that it's not sustainable, and people are starting to notice that. Now, if we look at the project itself, right here, so we go to drip community. So the drip.community. If you look everywhere, there's nothing about the code. Okay, we don't know what code they're using. We don't know what they're doing. See, you got the swab, the faucet, the reservoir. There's a white paper here, and I'm not sure what this is. There's a tutorial, Ripple enabled, whatever that's for. And see, you can trade the token, you can stake it, you can put it on the liquidity farm. That's a new feature, and so on. Okay. Now, if you want to partner with them, join them on Telegram, on Twitter, that's fine. They don't seem to have a Discord. And there's no source code available. So it's a black box. You don't know what they're doing, okay? And that's very risky, okay? If the code was available, and if the code was audited. See, this is the light paper. So they're giving you 1% daily return on investment. Sure. Sustainability through tax on transaction. That's how they pay you this. They tax you on every transaction. And they have a team building referral system, so it's kind of an affiliate program, or a little bit like a multi-level marketing. Okay. And they got compound interest, but they charge you a tax on that as well. Okay. Probably brought to you by Forex Chart, BB, and the Drip Network. Yeah. All right. So, I mean, if we search for audit on this, there's no audit. We don't know what they're doing with the code. Okay. And here, essentially, they just explain to you how to use the system. Okay. Just instructions. Okay. What's the faucet? And the Drip Network's faucet is low risk, high reward contract that operates similarly to high yield certificates of deposit, blah, blah, blah. Okay, that's all nice, but we cannot read the code. It's not available to us. Okay? So again, the essence of crypto and DeFi is trust less. You don't trust anybody. Here, we have to trust anonymous people, okay, Forex Shark and BB and whoever works there. And we have to trust them that they're not stealing the money, because we have no way of knowing if they are or not. Okay? And we don't know who the heck they are. We don't know what the code is supposed to be doing. Okay? They tell us in the light paper, okay, these are the taxes. When you do this, you get taxed this, and so on and so forth. And this is how you compound your interest. This is how you make your money, and so on. Okay, so I have no problem with charging taxes. Okay, a project that I'm working with, the Delta Finance project, we are charging taxes, but we also have other ways to generate income and make the project sustainable. We're selling NFTs. We're issuing bonds and all kinds of other stuff. There's no such thing here. There's no NFT sales. There's no lending pros. If they were lending money and charging interest, and say that the interest that they charge, they give back to you, a little bit like Aave is doing. Where's Aave? Did I close it? Yeah, I think I closed it. But if you go on Aave, that's what Aave is very simple. You deposit money, you can use it as collateral, and you can borrow against the money you deposited, right? So they charge you interest higher than the interest that they give you, which makes sense, right? So, and it depends, you can deposit and borrow various coins and so on, and there's a way to make a profit in there. But here, we don't know anything. So you have to trust these guys. I don't like to trust people that I don't know. And it's not regulated by anybody. We don't know where that shark guy is. He could be in Monaco, he could be in Nigeria, he could be in the United States, he could be anywhere. And is he actually, managing the money the way he says he is? Maybe he is, maybe he isn't. We have no way of verifying that. Okay? So, if you like the project, I don't. I avoid this kind of projects because I don't think they're sustainable. I did the math, and the taxes are too low to generate 1% daily. It's too low. Basically, what you have to do, you have to rely on having new investors coming in all the time. And the money that is coming in, you tax that, and then you give that as interest to older investors. Okay? And so basically, you're stealing from Joe to give to Jack. I don't like those systems. Okay? Those are Ponzi's. All right. Can you look at waterfall DeFi tranches? What the hell is that? Isn't multi-level marketing just a nice word for Ponzi? Multi-level marketing is not always a Ponzi. In this case, this is a Ponzi. Okay, so make sure you use the terminology properly. Okay, in this case, yes, this is a Ponzi, but the referral system is the multi-level marketing part. Even without this, it would be a Ponzi. Okay, this project is a Ponzi by default, the way it's designed. Okay, a lot of people made some money with this, but long term, well, just look at the chart. It doesn't look good long term, does it? I mean, over here, everybody was super happy, obviously. But down here, it doesn't look so good, does it? I don't think it's going to go back up. It might, but I could be wrong, right? Waterfall DeFi trenches, what is that thing? What time is it now? Okay. All right, so. Is that on CoinGecko? I'm going to have a look. If I cannot find it, then you'll have to give me a link. Waterfall. Which waterfall is it? This one or this one? I don't know. full governance. No idea. Can have a quick look, but I don't know if that's the right project. Bringing to risk tranching. Well, that's a tranching to decentralized finance. I don't know. All right, how does it work? What is this? Let me have a look. I don't know anything about it. Okay, each portfolio aggregates a curated list of yield farming strategies in DeFi, such as portfolio. Right. Each portfolio is then sliced into different tranches, where the principal and the yield are distributed based on the tranche seniority. Each tranche offers a different risk. Just a yield, cash flow from the portfolio split in sequential, blah, 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 blah. Okay. Okay. All right. I don't see audits. I don't see source code. I do see investors. I'm not familiar with these guys. Have a look at the documentation. See, the problem I have is that project's opaque. That's my problem. It's another black box. They say they're DeFi. But if they were really DeFi, the source code would be right here. Okay? Pretty sure there's no audit on this. Let's check. Whoop. See, even on their roadmap, they're not planning on having an audit. That's not good news, okay? You see what I don't like? I don't like when people are using fancy terms like tranching, whatever that is, okay? Okay, they explain how it's supposed to work and so on. But I don't like that they claim to be DeFi, but they're not. See, DeFi is open. The source code is open. You can check the code to verify what they're saying. Right now, I can't find the source code. They don't seem to have an audit plan. I'm staying away from this. Too risky. Too risky. It could be a scam. We don't know. I mean, okay, yeah, they have a bunch of investors, but I would have to go through all of them, verify, are you really, like, first of all, we'd have to know who those investors are, and then we'd have to contact all of them, and then find out, okay, are you really an investor on this project, and so on, and tell me more about the project, and blah, blah, blah. And I'm not very keen on this right now. Not very keen on this. DeFi name only. Yeah, Dino. Sounds about right. You know, it's a little bit like those guys that, like Celsius. They're saying they're DeFi. They're not DeFi. They're centralized. This is CeFi. Okay? This is CeFi. But they're investing on DeFi. They're taking advantage of DeFi to give the yield to their investors. Okay? And if you have money there, there's no way you can take it out at the moment. They froze the withdrawals, right? All right. So that's it for today. It's been a long chat. We're going to try to do this again tomorrow, hopefully, if nothing bad happens. Because sometimes my work takes over my life, and I have no time to do these daily videos. So thank you very much for your questions. If you got more questions, put them in the comments below. I'll answer them. You can also join us on Discord and ask your questions there. And you can also DM me on Twitter. So until next time.